many of them are sitting quite anxiously. Shall we wait until interest rates drop, or what should they do? Should they sit idle? What's the advice for first-time buyer?
That's a great question. So I have people ask me that question a lot, and one of the rules, and I know you ladies are super experienced in real estate, the best time to buy is now. Mm-hmm. The best time to buy is always now, dependent on your individual circumstances. Yep. So as a first-time buyer, look at where you are in your job situation. Look at where you are with your savings, mm-hmm. because there is no guarantee that interest rates will go down. And the way that the property market works, it's basic supply and demand. Yeah. So when they put the interest rates up, you have fewer people chasing properties, which means it becomes a buyer's market.
That's it.
But when they put the interest rate down, then everybody's chasing the same properties, and you have more competition.
That's
so.
It.
There is no right time except for the right time for you.
Exactly.
I really like that part. And I mean, Victoria and I, we have this all the time. And I always say, you know, what is the economy? Your economy is basically the money you have in your pocket. And I'm really, really pleased that we're getting that message out, because that's one of our common questions. Oh, should we buy now? Where should we buy? And it's really down to the individual. So I'm glad that this is being highlighted. And typically now, especially, interest rates is like the buzzword.
All right. So I'm really glad to be here. Oops. I'm really glad to be here. Can everyone hear me? Can everyone hear me? All right, great. So we're going to start this property chat. It's going to be another exciting, informative conversation where we'll be talking about property now. In that little bit, it's a clip from a podcast that I did previously where we were talking about interest rates. And I know people have tuned in this evening to understand a little bit more about how to get the very best mortgage, but getting you in your home is just the first step. I've worked in different aspects of finance. My name is Anthony Lindsay, and I have a very special guest here today who will go ahead and introduce himself.
Thanks for having me. I'm Ahmed. I'm a financial protection specialist, and I generally help clients work towards planning for the future. And I look forward to these type of conversations because I think failing to plan is planning to fail. And the more information you have available to you, the better you're able to plan, right? Especially now coming up to the new year, isn't it, Anthony? A lot of people wanting to plan for this, plan for that. I notice the gym is fully packed. See everyone with their notebooks and their squats, 5 squats, 10 squats, this and whatever. They're all planning, right? But the right plan is what helps you to execute. And I suppose that's what we're here to do, right? Give people information and help them take actions towards their set in stone goals.
Exactly. I'm really looking forward to your session. So I'm just going to get people up and running with a few things. So a little bit about me. I've been in the banking and finance industry for over 30 years. I know I don't look it, but that's why I grew the beard, because otherwise I just look like somebody's nephew. But I've done debt management, I've done wealth management, and I've done lending. I've done all of these things. And the reason why I like to bring this out, unlike some brokers that you may speak to, it's not just about me getting someone in a home. It's about me keeping them in their home. And this is why protection and wealth planning and things of that nature are so important. It's an integral part of getting your mortgage. Now, if you've noticed, not only because it's an FCA guideline, but when you're talking about mortgage products, they always have this disclaimer. Your home may be repossessed if you do not keep up the repayments on your mortgage. And there are really only a few reasons why most people end up falling behind on their mortgage. And as someone that worked in litigations, I had the very unfortunate job of actually going to people's houses before foreclosure. So I had the conversations. I was sitting in the living room with people and trying to explore ways that we could keep them in their home. And not at any point did anyone ever tell me that, well, I have the money, I'm just not paying. What it would usually be is loss of a job, loss of a spouse, someone's off work due to sickness. And these are the things that happen, and we can't control life. We can't control the things that will happen in life. But what we can do, as was said earlier, is we can plan. We can mitigate that risk by putting the right things in place. So as you start having the conversation about your mortgage, that's one of the things that you want to keep in mind. This is where a broker comes in. Now, some people will go directly to the bank. And I'll be honest with you, even as someone who's an experienced person in finance, I always just figured, well, when I need a mortgage, I'm just going to go to the bank. But what people don't realize, and what I didn't realize, is when you go to the bank, they're only able to talk to you about their products and services. So that means you don't get choice. So there's certain banks, for example, Nationwide is really good for first-time buyers because they have higher multiples on income than some other banks. So Nationwide might be really good for first-time buyers. You may have other banks that are really good for, let's just say, someone who is on a skilled worker visa or someone who's new to the country. So each bank is going to have a specialty. But if you go to a broker, you get to access all of those different options. And the other thing that I found after managing branches and having staff, no matter how good they are, when you walk into a bank and you're asking for a mortgage, that person is just there to deliver that service. They don't necessarily have to work harder to keep your business or to get referrals. Whereas with a broker, the broker is going to work really hard because as brokers, we build our business and make our business by referrals. And lastly, we're going to talk to you about products and services, including wills and protection. We're going to talk to you about wills and protection, which is an important part of the mortgage process. Now, if you're looking to get a mortgage, who's involved? You have the broker or the bank, which would be the lender. You have the estate agent, and you have the solicitor. Now, what I like to remind people is the estate agent works for who? The estate agent works for the seller. So as someone who's looking to purchase a property, you want to make sure that you have someone in your corner that's working for you. And that's what a broker will do, because the estate agent has an obligation, a fiduciary requirement to get the very most for the seller, because that's their client. So that means they're going to put you in a position where you're bidding against other people. So make sure that you understand that the estate agent does work for the seller. And then you have the solicitor. The solicitor really is that person that's going to dot the I's and cross the T's. And a word of advice, don't go for the cheapest solicitor. I see this happen all of the time. People go on one of those comparison websites, and what they do is they're like, oh, this person's cheaper. But they forget that any mortgage and any deal is just as fast as the slowest person. And I'll say that again, the deal is as fast as the slowest person. So if you've gone and said, well, I'm going to save some money by using a solicitor that I'll never talk to, it's just a panel that you log in, and that causes your deal to take longer, that might mean that you're living in a rented property for an extra month. So if you're paying £1,200 a month and you end up being in that property for an extra month, that's £1,200 out of your pocket. So you haven't really saved any money. So it's important that you have skilled professionals that are going to put you first, that are going to work really fast for you. So the key stages of the purchase process would be the initial consultation. That's when you're having the conversation, talking about what you're looking for, how much you have for a deposit, etc. And a tip for everybody, don't wait until you're ready to make the purchase to start exploring mortgages. All right. This is one of the biggest mistakes that I see people make. What they do is they wait until they're ready to get the mortgage, and then they speak to the broker. Now, if there are things that need to be corrected, like on your credit report or missed payments, anything like that, it's too late then. So a word to the wise, start talking to someone at least 6 months in advance. That way they can tee you up to get the very best deal. They can tee you up to make sure that they can clean up any items, clean up your bank statement, cancel any standing orders, anything of that nature. So you have that conversation. Then you would get an agreement in principle. Agreement in principle is really important because when you're out there looking at properties, some estate agents will tell you they're not even going to let you look at a property unless you've proven and demonstrated that you can get the mortgage. That's actually illegal or conditional selling, but they want to make sure that you're serious. You're not just out there kicking tires. So you get the agreement in principle. After that, you know how much you can borrow in theory. But one thing to consider is an agreement in principle is not a credit check, it's not an application, and it's not a mortgage offer. It's simply someone keying in some information and saying, well, based on this information, this is how much the bank would lend. So it's super important, but it's kind of not that valuable all at the same time. So you're going to need it, but make sure that when you get that agreement in principle, you've keyed in the correct information. After that, you will search for the property, then you'll negotiate a deal. Next, you're going to do a full mortgage application once you found the property that you want and the offer has been accepted. And then that's when all of the legal work starts, and then exchange of contracts. And then you're in your home. And let's be honest, when you go to a mortgage broker or go to the bank, you're not looking for a mortgage, you're looking for a home. All right. So keep that focus on getting the keys to your new home, and everything and anything that's going to get you there quicker. You need to do those things. All right, I'm going to give a few tips and then we're going to move into our protection conversation. So a few things to do to get the best mortgage and to maximize your savings. One thing is to move your deposit into a high rate savings account, and that will maximize the interest, because keep in mind, the money that you spend for the deposit doesn't come out of your account until close to the end of the process. So you could have that money in a high savings, high interest savings account and be earning, a couple of $100 potentially, pounds potentially, or, it's something that will put more money in your pocket, clean up your credit, clear debts. So if you have small balances on credit cards, it's better to pay those off. Even if you're taking some money out of the deposit, it's better to pay those things off, that you have more affordability. And you want to make sure that there's no unnecessary direct debits, anything of that nature. So that's another reason why you want to speak to someone about 6 months in advance, because it will give you time to do all of that. Now, this slide says additional expenses, but let me be clear. These are expenses that that you'll need to pay. But in the case of protection, it's not an expense. Protection or insurance or making sure that you mitigate against risk is not an expense. It's something that you should factor in when you're getting your mortgage. So as a rule of thumb, I tell people about 15% of your mortgage payment, put that aside for protection. Because guess what? We're all going to die. I remember the first time I said that to somebody. They're like, and, I can get away with it. Maybe other people can't. But the fact is, it's not if you die, it's when you die. And if you die while you have a mortgage, or if you contract a critical illness while you are paying on your mortgage, the last thing you want to do is have to also be worrying about collection letters and foreclosure. And, as a man, one of the things that I've unfortunately had to experience is losing, my grandfather and my father to cancer. And I don't say that people can feel sorry for me. I say that because it's hit very close to home in my life. And depending on what statistics you look at, either 1 in 4 or 1 in 3 people are going to experience cancer in their lifetime. So it's not a if. In some cases, it's a when, and you want to make sure that you mitigate against that and have things in place. Now, before we move into the next section, I just want people to look at some of these statistics and think about how that would impact them as far as their mortgage payments, as far as, just being able to wake up every morning and feel like, yeah, there's hope today. Now, I don't wish cancer or sickness or accident on anybody, but it's my job, it's our job to make sure that as serious adults, as people who care about our families, we have these discussions, especially when there's a lot of conversations going on about generational wealth and handing things down and having things in place for our children. And in the Bible, it says a wise man leaves an inheritance for his children's children. Like, how amazing is that to be able to leave an inheritance for your children's children? But I'm going to hand over to the expert right now, and he will talk you through a couple of things.
Thanks very much, Anthony. That was nicely done. And I think when I was just thinking about everything that you were saying, when you got to the protection side of things, the first thing that came to my mind is, damn, I've had this conversation so many times that it's so normal for me, but the average person might think this is so bleak. Like you just said, like we're all going to die. I don't want to hear that, right? But it's a reality, right? And sometimes when I speak to clients, I try my best not to just highlight the aspect of, let's say, death, right?
Yeah.
Happen in the event of your death. I try my best to help clients look at it holistically, in a sense of working towards planning and understanding the risks that come without actually having a plan, right? And I think I've got some slides, right? Let's see if I can run through the system, right? And I think it's important for clients to understand that when it comes to life in general, the main reason why you're working to get that mortgage, you're working to get that property, is that buzzword, right, that you mentioned as well: generational wealth, financial freedom, peace of mind, right? But to get to those stages, to get to those things, these actions that needs to be taken, right? And sometimes people don't take these actions because they don't understand, right? And I always speak to my clients about the 5 stages to financial freedom and help them understand where financial protection insurance comes into play when it comes to, planning towards these 5 steps. First thing is ultimately having a plan, ultimately knowing exactly what it is that you want to achieve, right? That's the first thing. The second thing is working towards building a form of emergency fund, working towards building some form of savings, working towards getting rid of bad debt. Of course, as you said, 6 months before the mortgage process, it's important for you to, start speaking to an advisor, understanding how things are structured, and getting rid of standing orders and things like that that wouldn't add value to what you're trying to do. One tip I've been sharing with people this week, especially starting to the new year, is getting people to set notifications to let them know what's coming out of the accounts on a monthly basis.
That's a great
and
idea.
I had a client that said to me, my goodness, I think Apple was taking £7 a month from me for a whole year and I didn't notice. So there's things like this that adds value, right? Paying off bad debt, investing for passive income, and then working towards building your wealth. But a key foundation towards building that wealth is financial protection. A key foundation to making sure that that house that you have remains under your roof. And as you said, you can then pass it on to the next generation, is working towards planning things, putting in place insurance policies, working towards your estate planning, the wills, the trust, and all the other good stuff that come into play, right? And I'm going to talk through some of the updates within the market to show you why it's important to have these plans in place, right? Now, in the next slide, I'm sure a lot of people have had their reactions. They've had their sleepless nights. They've had their junk food moments, hearing about the new budget, right? They've had the looking for passports, right? Looking at plane tickets to fly because of the new budget. But for me, I think the budget itself kind of just highlights the importance of making sure that you're proactive, especially like, for example, people, second-time buyers now that want to acquire properties, 3% increase in stamp duty. That wasn't there before. The Help to Buy scheme, everyone's saying you need to do it, you need to do it, you need to do it. But then last minute, everyone's rushing to do it, right?
Yeah.
That's the lack of proactivity. And these are just some things, right, that's changed. within the budget, and a key thing is the fact that now pensions are also included in inheritance tax calculations. Now, before, pensions used to be a thing where it's a good safety net to put your money away. It's not going to be included in any calculations. The biggest thing that adds towards inheritance taxes used to be properties, Anthony. Right? Now, pensions is now included within that calculation. And I'm going to deep dive into why it's important to make sure you have financial protection in place and how it adds towards the liability. Right? Now, when it comes to inheritance taxes, it's a tax that is levied in the event of death. Right? So that's including, all your properties, that's including chattel, that's including, gold, whatever it is that you have. And there's different calculations for different individuals. A single individual calculation is £325,000. That's the residential nil rate band. That's the amount that is exempt from that tax. Right? Anything over £325,000 is taxed at 40%. Now, you work within the London area, Anthony, and you can tell me what the average rate of a mortgage is in London, right? I've seen those videos on TikTok where people saying, "Damn, why was I still in kindergarten or nursery at 2? I should have been buying properties for £50,000, right? That would be worth 1.5 million now." So, properties are a huge part, and it's going to increase your liability. The inheritance tax liability that's going to be taxed later on. And how do you solve that problem? You solve that problem through insurance. And the reason why I'm coming from this angle, because there's the main concept and the main benefit of insurance that a lot of people are aware of. And it's actually not spoken about a lot, especially if you're getting a mortgage, which is probably going to be the biggest liability or biggest debt, I should say, that a lot of people have. That is an amount that needs to be paid off in the event of death. Or you said the property can be repossessed. And how do you mitigate that? Through insurance. Right? You can set up insurance policies that can cover the mortgage liability for the term, for as long as you have the mortgage for. And if anything was to happen to you within the term of your mortgage, the insurance policy will pay off the rest of the mortgage. Right? And it also continues, because after the mortgage term finishes, now you have a property that you own that's going to continue to increase in value. You might say, I want to pass it down to my descendants. And let's say you passed away, and then there's inheritance taxes. You have to go through the probate process, which is a process where the government, administers and calculates everything that you own, and then decide what piece of the pie they're going to take, because they tax us for everything, Anthony.
Yeah.
They even tax you for breathing. They tax you for dying. They tax you for everything. So there's a bill that needs to be paid. The insurance policy can also be used to cover that lump sum and help to give you that peace of mind and build that legacy that you need for your family. And there's different ways in which you can structure the policies, right? You can structure the policies by your personal name, or you can also structure policies via a business, right? There are people that own, businesses, they're key people, relevant lives within the business, and the insurance policies that are taken out for the life, right, could be tax deductible if it's done via the business. So there's different ways in which it can be structured, right? A lot of people might say, okay, I might take out an insurance policy, but it's not for my benefit.
Yeah.
Someone else is going to benefit from it. I'm paying for something that someone else is going to benefit from, right? So, okay, someone else might benefit from it. It might be your descendants, but there's also ways in which you can take out a life insurance policy that could be for your benefit, because it's a tax deductible expense if you run a business. But there's also other things, as you mentioned, it's interesting hearing multiple stories of people who's had family members who's suffered from instances or gone through the experience of seeing a family member suffer a health or critical illness that's led to death, right? And there's a lot of people that this is so far away for them. It's so far a reality to them, but it is a reality. It's something that does happen, right? And setting up a critical illness cover is a type of insurance policy that is for your benefit too, right? Because let's say, for example, now the person has the mortgage, right? They've got the keys to the house. You see those videos online, don't you, Anthony? Them with the keys, right? They've got the champagne on the table. They've got the broker, giving his 2 pence as well, promoting, yes, we did it. Amazing, right? But then when you come to think about it, what if you became sick and you can't continue to pay the mortgage? How's that going to be covered? So critical illness cover can help with a lump sum that can cover, the mortgage in the event of you being unable to carry on working or covering the bill itself. And there's other things as well, like income protection that will give you, percentage of your monthly income in the event of you being incapacitated, unable to carry on working. There's so many options. And I think it's important that, sessions like these are available, right? Because this is information a lot of people do not have, right? And in actual fact, when I look at the GoFundMe pages, right? I'm not sure if you've seen. I try my best not to speak about it. I'll be very honest with you, but it's more times than not, it's because of the lack of proactivity. Don't know if you'd agree with me, Anthony.
Oh,
right?
absolutely. It's one of the common things that I talk about in my social media. And, the sad thing about it, the sad thing about it is quite often someone's had the conversation with the person, but you made an interesting point, because even my mom said this at one point. I was talking to my mom about protection, etc. Now, I want my mom to live forever, but life is life and realities are realities. And what she said to me was like, well, why am I worried? I'll be dead, right? She's like, but as you said, it's not just about that. And if I could interrupt you for a second, I'm gonna share a quick story that I tell people all the time. So when I was little, my grandmother, because I grew up with my grandparents, had this clock on her mantelpiece, and it wasn't a huge clock, but it operated kind of like a grandfather clock in the sense that you had to wind it, and it did the ding, 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 and I just always remember that being in the home. And I always used to say to my grandmother, because these are old Jamaican people and they talk about death like very comfortably. And I'm like, Grandma, I want that clock. I want that clock. So we're living in New York. They retire and go to Florida. We're going down there. I go down there year 1, the clock is there. Year 2, like year 3, I'm like, where is this clock? Oh, that hasn't worked for like 10 years. I threw it away. And when my grandmother passed away, through all the stuff and all the planning that she did do, what really resonated with me is one of the things that we forget sometimes with the protection. It's not just about the stuff. It's not just about the money. It's the sentimental value as well. So by having the right protections in place and having the right estate planning, it can help reduce the infighting. It can help reduce just some of the turmoil that comes from, having to go on GoFundMe, because that's embarrassing.
100%. And it just makes me think about the amount of people as well that don't have wills in place, for example, right?
Yeah.
People that, let's say, for example, now they've acquired, the assets, they have the properties, they have their children. I had a client, a prospect of it, in actual fact, that assumed that his properties was to go directly to his children. Right? Oh, and 100% is going to go to my kids. I'm like, do you have a will? No, I just assumed it would go to my kids. And the thing is, if you don't have a will, you have a will without having a will.
Yeah.
And it's called the laws of intestacy,
right?
50%. If I'm correct with this, 50% of your total asset goes to your spouse.
Yeah.
Another percentage of it, half of that goes to the children, and the rest goes to the spouse. That's your will without the will.
Yeah.
Now imagine if you're married or you're in a civil partnership and you're separated and not divorced. I've seen this happen where they weren't on speaking terms for 15, 20 years, but because they weren't actually divorced, someone else has received the properties, the assets that you had that you didn't need them to receive because you didn't plan, right? I've also seen people that weren't married, right? They've been living together for 30, 40 years. They didn't have a will. and it had to be the long lost cousin that receives the actual title to the property, and the person's been living with the other person for 30, 40 years, having to get kicked out of that property,
Yeah.
right?
Yeah.
Because there was no planning in place.
Yeah.
So,
And one of the other things is, I think one of the reasons why I'm passionate about these type of sessions is because there's so many myths out there, and so many people get their advice off TikTok, right? So I see quite a few letters behind your name. What do those letters mean?
yeah, so it's interesting you said that. My blood sometimes boils. I don't know if that's something I should say. When you see these TikTok videos of people speaking about things that they have no idea about, and then what happens is a lot of people come to meetings and like, oh, can I borrow from my insurance? What's the Rothschild method?
Yeah.
I'm like, my goodness, like, where are you getting this information from? Of course, we're the experts. We're the ones that are qualified. These exams, these things that we need to do to make sure that we are able to give you the right advice, right? So that we can give you that peace of mind, so that we can show you the gaps that you probably haven't actually thought about, right? And give you the right information that's true to reality, not the ones you see on TikTok or you see people speak about, if that makes sense.
Yeah, and the thing is, as licensed individuals, the other thing is, if someone takes advice off someone on TikTok and it goes left, who do they go to? They can't go to the ombudsman. This person online, and I'm not I have some friends who are really big on TikTok and really big on Instagram, and they're amazing at what they do. So I'm not saying everyone, but what I'm saying is, I think social media is a great place to be introduced to concepts, then bring those concepts and an open mind to a professional that understands your individual circumstances. Because I've spent, like I was telling you, I spent the last couple of weeks really looking at YouTube and analytics and data and algorithms and all of that. And one of the things that I've come to realize is a lot of these influencers, they're just doing things that are algorithmically favorable. So when you put certain catchphrases or certain trigger words in a thumbnail, more people are going to view it. So these people, unlike you and I, these people don't make their money from being a professional in finance. They make their money from ads. So their ultimate incentive is to just get more eyeballs. Again, that's not to say that there's not truth in what they're saying. It's not to say that there aren't some valid points. But each individual is very different. And when it comes to something like protection, you don't want to take that chance. You don't want to be reliant on some TikToker who, maybe never even graduated from university. And there's nothing wrong with that. But I'm just saying, you're putting your family's future in the hands of someone you can't even pick up the phone and call if needed.
100%. And I think when it comes to speaking to, let's say, an advisor, I always say to my clients, the biggest weapon or the biggest tool in an advisor's arsenal is the fact find.
Yes.
Because the fact find kind of enables us and enables the clients to see their reality on paper, right? And then highlight to them the gaps and then show them how to mitigate the risks. Show them, how much they need in the event of something bad happening to them, right? Helping them understand what a protection gap is and what their protection gap is. And for context, it might sound like a buzzword, but in simple terms, the protection gap basically means the amount that you need quantified to the T in the event of something bad happening to you. And everyone's circumstance is different. And going back to the TikTokers, I generally, nothing against them. I don't want my inbox to be filled with threats and anything. It was only a joke, but, you're not able to get the full information in depth, just through the social media video. It has to be something from the conversations that you have with the advisor to then see exactly what your needs are, if that makes sense.
Yeah.
And then based on that, then a recommendation could be made, and then we can then help you put things in place that will help you, have that peace of mind you need in the comfort of your own home, if that makes sense. So it's always great having these conversations. I light up when I get the opportunity to speak about these things because information is not readily out there.
Yeah. And then the other part of it, like you were saying, with TikTok, they're just putting something together and putting it out. When you're doing the fact find, you're having a two-way conversation, right? And you're able to press them. And as someone that's more experienced and more mature, like, I'm not afraid of that uncomfortable thing, because as someone that has been a bank manager, I've had both scenarios. I've had scenario number one, where one of my staff members has set up a mortgage for someone. They've done everything that they have to do. They've talked about the protection. The person's like, oh no, insurance doesn't pay off, because people always say that. And I'm like, well, give me an example of when that's happened to you. It's never happened to them. It's always happened to someone else, right? So that individual did not take out the insurance. And then unfortunately, a little bit over a year later, I have the spouse coming in saying, my spouse has passed away. I'm sure we have something in place. And it's horrible to then have to tell them, no, you don't. But I've also had the better experience, where someone has had something in place and they've actually come back into the branch and said, look, I'd rather have my husband, but at least I know things are in place, things are taken care of. I don't have to worry about now me and the kids are going to lose our house after losing their father. So I am unashamed to make someone feel uncomfortable, because, as I said, we're all going to die, and I can sleep well at night knowing, not just because the FCA requires that I talk about it, but I know I would want someone to have that conversation with my daughter or one of my grandchildren or one of my nieces or my nephews, friends. I care. I really do genuinely care about it. And so what you do is so important. And what you're saying about the fact find, not everyone's as good as you, right? So some people just will, do the tick box exercise. So can I ask you a question around the fact find? What are some of the common things and pushback that you get when you're having the conversation around protection?
I'll break it down, because to be honest, I feel like I have that almost every week. But that's why I say the fact find is my biggest secret weapon, right? Because you're able to show the gaps to the client. I think a key pushback is the fact that clients say, I don't think insurance pays, right? And you can break that misconception. This is the UK, it's a developed country. Information and data from providers are available online. You can go online, and what I do, I share my screen, I show the payout rates, right? 97, 98% of the mainstream providers, they pay. The 2% that do not pay is based on, let's say, misinformation,
Yes,
or lack of sincerity in going through the fact finding. You highlighted something. You said something along the lines of the fact finding that you do might be different to other fact finding, because there's a difference between actually advising and selling.
yeah,
When you go through an advisor, they're able to actually show you what it is that you need, rather than just saying you should take this because it's this amount. Now, when going for the fact find, the best way to show the client what the gaps are is when you go through how much they make and you ask them, what will life look like if you're no longer able to bring in this income? You go through the children's section and you explain to them that it's been reported that it costs at least £200,000 to raise a child from the age of 0 to 18. Right? Now, if you have 2, 3, 4, some people even have more children, that's a huge gap. What will life look like if you're no longer in the picture? You've got a mortgage, you've got properties, right? What is the inheritance tax liability? What is the mortgage debt on that property? Now, when you start to show them this, the conversation moves from the fact of what will happen in the event of your death to I'm looking at my reality.
Yeah.
Right? And then the key thing that a lot of people tend to have a pushback on is the fact that it's unaffordable. But then that's why we go through the budgetary requirements, right? We go through the house of expenditure. We go through what goes out of the account on a monthly basis. We understand what disposable income is. Every single person has 10% of their disposable income. Every single person has 10% disposable income. That 10 to 15, 20% should be the amount that you are earmarking for your financial protection, because that 10 to 15 or 20% is protecting the 80 to 85 or 90% that you have left. That's your safe haven. You should never be in a position where you're either having to buy bread or pay for your insurance policies. That's bad advice.
Yeah.
And when they understand that, I then push back because I know what 10% is, and I say, hey, you're going to spend this money anyway, whether you like it or not. And then it comes to a point where they can see the reality and then they understand, and the value's already added before even anything's offered, because that's the most important thing, education. And then when you educate people, they understand why they're paying for their policies. Because the worst thing you could do is also take out insurance policies and not know what you have.
Yeah. Yeah. And I think that's one of the things that I have seen less experienced people do. They're just going through the tick box exercise. And it's talking them through the policy. It's putting them in that place. But it's also, it goes back to that thing that people don't care how much you know until they know how much you care. So letting them understand it. You recently got married, didn't you?
Yeah.
So like, it's having those conversations where people know, look, I'm a human being too. I'm not just a guy in a nice suit and a tie. I'm a person that has children, that has, a wife. And I wouldn't want you to be in a situation that I wouldn't want myself to be in. And when you talk about the thing that tickles me about the disposable income is when you're doing a mortgage for someone, you have a level of transparency about their life that very few people have about them. So for you to have the conversation with someone who's spending £80 a month on Sky and is always upgrading their phone, et cetera, et cetera, et cetera, and then they're telling you that they can't afford £40 a month for a cover, or they're being dishonest with themselves. And as I said, listen, I've been doing this a long time. I don't suffer foolishness like that. I'll say, look, if you're saying that it's not important to you, I'd rather you say it's not important to you, right? But don't tell me you can't afford it, because I'm looking at your finances.
I'm looking at the reality. I can see it. We can both see it, and the reality doesn't lie. And I think, to be very honest, I think the mindset shifts once the understanding is there.
Yeah. Yeah.
I think, and that's the problem. The problem is because there's a lot of misunderstanding, there's a lot of misinformation, there's a lot of misconceptions. And I think you mentioned that, no, insurance doesn't pay. It's always in regards to someone else and never them. So there's that misconception, and most people, they run with it. But once they become educated and they understand, they see the value, right? They understand that it's not just something that's going to pay out in the event I pass away. There's also other benefits. There's additional benefits that can be offered within your cover as well. Some providers will give you additional benefits that come with your policies. Yeah. There's tax benefits that come with setting up your policies as well, right? There's other things that you can do, because financial protection, personally, is not just getting insurance policies, it's putting other things in place as well. Setting up an LPA, a lasting power of attorney, that gives someone else the ability to carry out your wishes in the event of something bad happening to you. Setting up a trust for properties is holistically, right? Being able to look at your full circumstance and know that I've taken certain actions will give you that extra peace of mind you need, instead of actually, wait until something bad happens, taking that reactive approach.
And what you said about the waiting, it triggered something that I tend to say to people. So I in my experience, what I found is, if I'm doing a mortgage for someone and they're 35 and under, the conversations seem to go the same way, right? For the younger people, you get them the mortgage, you get them in, and I always have the conversations separately. So I do the mortgage conversation, and, I introduce the protection conversation, but I separate them because the protection needs to be talked about by itself. But it always makes me smile, because the comeback for a lot of the younger people is, I eat well, I go to the gym, I do all these things. And, I know you probably say this as well, but today is the cheapest your insurance and protection will ever be, because as you get older, more things happen. And the moment something has happened, your insurance premiums are going to be more expensive. So instead of people saying, well, I do eat well and I do exercise and I am young, therefore I'm going to put something in place.
100%.
They look at it the other way around, because when you get to my age, the insurance is a lot more expensive, because something is more likely to happen as you get older. Now, I'm going to ask you a couple questions as we transition. So
Yeah.
if you could just explain life cover, then explain critical illness cover, then explain income protection.
So, in simple terms, a life insurance policy, and I suppose this is the one that a lot of people know about, a life insurance policy pays out a lump sum in the event of death. It's simple as that, right? And the benefits of life insurance, as I said, it can be used to cover the mortgage liability. It can be used to leave an inheritance for dependents. It can also be used to cover inheritance tax liabilities. And in actual fact, a life insurance policy situated within a trust, right, is probably one of the only products out there that pays you out a lump sum tax free based on you paying a premium. Right,
Okay.
so it's for your benefit and it's for legacy planning. It's for the benefit of your family. That's what a life insurance policy is. It does exactly what it says on the tin. Pays out a lump sum in the event of death. Now, what a lot of people don't know about is critical illness cover, right? And what does a critical illness cover do? It also pays out a lump sum, but it pays out a lump sum in the event of you suffering a specific defined critical illness that the insurance provider has selected within their offering. Now, a lot of people think back and say, isn't that a bit dodgy? Selected. Now, that's why I said this is the UK and these laws, these structures, these things that are put in place. Now, the Association of British Insurers recommend for providers to cover a list of conditions that, based on historical data, are the conditions within the market that most people suffer in the UK. And on this list, if I'm not wrong, last time I checked, there's at least 36 conditions that are included within that list. And the average conditions that providers cover is a minimum of 45. That's on average, but it can be a lot more. But then when we break it down, when I have conversations with client, most critical illnesses historically that people pay out, or that providers pay out for, most of the time is cancer, heart attack,
Yeah.
stroke,
Yeah.
kidney failure, multiple sclerosis. That's the quote unquote big five, if you want to call it that, right? And they're mostly claimed on 80% of the time. Now, that's what a critical illness does. It gives you that lump sum in the event of you being sick, unable to carry on doing exactly what you do, to give you that peace of mind so you can recover. You don't have to rush back into work. Now, the third policy is an income protection policy. And I always say to self-employed individuals that don't have a sick pay benefit that you're not allowed to be sick because you
Yeah.
generally aren't. You're not,
Yeah.
right? You're not allowed to be sick because you're the money-making machine. You're the one that has to bring in the income. What an income protection policy does, it becomes that safety net. It's a type of policy that actually pays out for every sickness. In actual fact, as long as you're incapable to carry on doing your daily or work tasks, the task required for you to do your job. And there's something called a deferred period. It's paid out after 4 weeks, 6 weeks, 8 weeks, depending on what the provider selected. After that period of you being sick or unable to carry on working, it will give you that lump sum for a period, until you're fit enough to get back into work. And these products definitely come in handy when you find yourself in a situation where your hands are tied, right? And you need to get what you need to survive. And those are the three products.
One of the things that you said, which I know is one of the reasons why a lot of people have tuned in, and one of the sexy things that you mentioned is the trusts. So if you could talk a little bit about trusts, and I also want to make sure that anyone who's watching that wants to get in contact with you will have some things that are in their head that they want to talk to you about. So you've talked about income protection, you've talked about critical illness, you've talked about just life cover. Now, around the trusts, could you just talk me through that and just give some bullet points and have something stick in people's mind that when they call you, they can build on that and you can unpack it for them?
100%. Now, a trust is a good tool to use that ring fences assets away from your estate. Right now, when we're talking about insurance policies, a lot of people are aware of the fact that the insurance policy is written into a trust. It doesn't necessarily mean that the actual lump sum is in a trust somewhere. The lump sum will be paid into a trust in the event of death, or the person no longer being here, and it will be distributed to the beneficiaries. That's the person that they want to inherit. What is it? The lump sum, if you want to call it that, right? But there are other type of trusts that are for tangible assets, right? Let's say, for example, a person might have the residential home, right? And they might be getting older in age. And they might say, I want to pass on this asset to my descendants, to my children, but I don't want this to be included within my estate. You can place your properties into a trust. Now, when I start to speak to a lot of clients, I'm starting to notice a lot of clients that are putting their properties into a property protection trust, are doing it because they're trying to avoid the care fees that comes in later life in the event of the government having to send, let's say, nurses or people to your house to take care of you, because there's a fee for that later on in life, right?
Yeah.
That fee is levied to the property or the estate that you own, right? If you place your property into the trust, that fee is not going to be levied on your property, right? And that property will be passed on to your descendants in the way in which you want. Now, there's other trusts, there's family asset protection trusts that are out there as well, where you can not only put properties into the trust, you can put, land into the trust, you can put money into the trust to be distributed at a specific time to specific people. There's different things that you could potentially do to mitigate your risks. And another tool that some of my high net worth clients use to mitigate taxes and other risks is a family incorporation company, right, which is a private limited company for the family. Great way to pass on generational wealth. So there's a lot of things out there that you could potentially use for your benefit, but you're only able to know once you go for the fact finding.
Yeah. And you said something which triggered a thought in me, because you talked about high net worth individuals, and I want to crush the myth that wills are for wealthy people. I want to crush the myth that all of these things are for wealthy people, because quite frequently it's the opposite. This is how wealth has been built. Wealth has been built through people having a will, through people having a trust. So that's another thing and another mindset that we have to break in certain communities, where they think, oh, well, wills are for rich people. No, wills are for anyone who's living. Wills are for anyone that has a pulse. Wills are for anyone that's a responsible adult who wants to make sure, let's be real. Some people aren't going to have families they want to leave it to. You might want to leave it to a charity. You might want to leave a lump sum to a charity or to a school or, to a niece, nephew, best friend. But ultimately, giving it to the government, that's not a good look. That's not a good look. And as you said, if you don't have a will, that's a will, because then you're just leaving it to the laws of intestacy.
110%. And I was actually looking at the numbers for inheritance taxes in comparison to the years before. I think the inheritance tax bill last year was close to £7.1 billion, and it's continuing to rise, right? And that's what comes from, not planning appropriately or planning ahead. And the options are there. There's a lot more information out there right now, and it's more so people being intentional about wanting to get that information and apply that information to their lives. Because that's another thing, Anthony. There's a lot of people that do take information too, but they don't apply it.
Yeah. And to know and to not do is to not know.
100%.
So as we wrap up, could you just share your details in the chat, as far as how people can contact you if they want to talk about trusts, lasting power of attorney, because that's another thing that people should be looking into under certain circumstances, critical illness, life cover, income protection. And really the next steps that people should be looking at is, especially if you're getting a mortgage, having the conversation with a broker. I work hand in hand with Ahmed, where we can have conversations and I can introduce you to him and you can have conversations with him to make sure that the right things are in place. So start having these conversations at least 6 months before you're ready. then once you're ready, we can get you an agreement in principle. As part of that conversation about the agreement in principle, what we'll do is we'll make sure that we've looked at your budget, we've had a thorough fact find, that when you then start having the conversation about protection, you're not saying this thing that the money is not there. You'll start house hunting, and don't forget, share this type of information, share these links with friends and with family, because we want to make sure that as many people are making better choices than they would without this information. So if you could just talk through your contact details as well as putting them in the chat.
Yeah, feel free to get in touch with me on LinkedIn. It's my name, my last name, Ahmed, IB. You can get in touch with me on Instagram. I'm starting to post a lot more on Instagram again this new year. That's one of my New Year's resolutions. I slacked off a bit for the last 3 months of last year since getting married. But you can get in touch with me, AIB_protect. I'm also going to put my email on the chat, ahmed.ibrahim@securemp.co.uk. I'm also going to put my phone number, and you can get in touch with me. I will place that also in the chat. And I'm literally a phone call away. I'm more than happy to help, more than happy to assist. And I also post educational content online, kind of similar to yourself, Anthony, to help get people thinking and being proactive about taking action.
Yeah, and I've found your information really, really informative, and I like the fact that, similar to this, your conversations are very approachable. You're breaking down what can be some complex issues. You break them down into things that people can understand. But the information is out there, and I just want to make sure that everybody that's listening, if you have a friend or family member that might be a little bit uncomfortable about talking about these things, these type of sessions are a good thing for them to look at, because sometimes it's about planting the seed. That way, when they speak to a professional, they can know what questions to ask, and you can remove that feeling of isolation where sometimes people might feel that everybody knows and they're stupid for not knowing, when in fact over 50% of the population don't feel that they have the level of financial literacy that they would like. So most people actually want and need these things. You have your banks, you have lots of resources. Just make sure that you utilize these resources. And as always, we like to respect your time. We like to make sure that we end on time. So we're going to wrap up now. Hopefully we've covered off any questions that were in the chat. So I've asked a couple of questions around, income protection and critical illness, but we're both here for you. My information is on the screen. And, if you contact me, I can share the additional information as well as the slides. Make sure that you like and subscribe subscribe for this content. That way you'll be notified anytime we do any new videos. And I'm going to hand over to you to just do a closing, and then we'll close out this session.
Yeah, no, I always say this in every meeting, and I always say this to every single person. Failing to plan is planning to fail. Now, with the information that we've, passed on, the conversation that we've had, myself and Anthony, even before the call, we're speaking, we can rumble forever, right? We're like two ticking time bombs that can just explode and, just go ahead and speak through different things. But the most important thing is knowing that this is something that has been helpful and it's something that can be applied. Because if it's not applied, then there's going to be consequences for the lack of action being taken and not being proactive when it comes to planning for the future. So yeah, I'll basically finish off with that.
Excellent. So let's go out there. Let's build some generational wealth. Let's make good decisions, and let's share information. Thanks.
If you don't have a broker and you'd like to speak to someone, I'd love to talk to you. My name is Anthony Lindsay. My phone number will be in the description. And I've been in finance for over 30 years. I've done everything from wealth management to collection. So I know